All right, so I think I am going to make sure I have this. All right, so it's been a long time since I've initiated any new positions in either of these ETFs. I'm not even going to try to remember when's the last time I made a trade, but a lot of it had to do with COVID, just staying out of the market. But now I think we have a clear understanding of where we are at and where we're going as far as the economy. And so what we're looking at right now is the FAS Financial 3 times Bull ETF. If this is new for you, this is the financial ETF, a leveraged financial ETF, which means that when the financials move 1%, this particular ETF is supposed to move 3%. Doesn't always happen that way, but that's what it's designed to do. And so we're using the RSI indicator, which is what I've been using for years now for these swing trades, and just kind of looking at our levels. You can't see the entire screen. I may scroll over just a little bit so you can see what's going on, but currently the RSI is at 60. Okay, and so we put our line right there at 60, and we're just looking at the chart to see what's been happening. And you see that the market fell a bit, and it's come back to what has previously been support. And so this is something that I've been looking at for the past couple weeks at least, just waiting for a nice entry to give me some idea of where the market is going, or where these ETFs are going. Better said. And so we're here. And so we look over towards the left, you'll see that this thing has been bouncing off of this 60 line of support. It fell through that support, and now it's back up to that 60 line. So it's either going to continue to bounce off of this, or it's going to continue through it. Okay, let's take a look at FAZ, which is the inverse ETF. This is the leveraged 3-time bear, right? So when the market moves down 1%, this ETF is designed to move up 3%. And so what we're looking at here on the FAZ, right now we're at 38. And I also want to say here too that the way this is designed is that 20 is an absolute buy, 80 is an absolute sell. Okay, that's not always the case because, as I've mentioned in previous videos, the market can stay high for a long time. It can also stay down for a long time. But like I said, we are now in a place where we really understand where we are and where we're going, so we can really try to make some heads and tails of this. So putting our line here at 38, 37, same thing here, we see that FAZ has consistently bounced up against this resistance at 38. It broke through that line, and now it's back to that line. And so the question is this going to be support for FAZ, which means it's going to bounce up, the market is going to head down, or is it going to continue down through this line like it has done over the last 3 months? The one thing that I'm looking at to try to make this decision, right, because right now we're at an inflection point, is what I call it, where it can go either way, right? And that's kind of where I want to enter. So I'm looking at the market calendar, okay? And so Monday, February 8th, there's nothing going on. There's no reports, there's nothing out. And so we can't really judge anything off of that other than earnings reports. The earnings are coming out, and so the earnings from these different companies are going to sway this market one way or another right now. And I just finished the third and fourth quarter earnings calls from probably about 6 or 7 different companies, and everything looks okay. Tuesday, February 9th, we see that we have job openings for December. to kind of see where that is. There's also the small business index for January. I'm expecting that December job openings report to be decent, right? Best Buy in their November third quarter report said they were bringing most of their furloughed employees back, and the ones that were not coming back full time came back part-time for the season. And so what that means is that I expect to see these job openings tick up. Now, is that going to really move the market? I doubt it. I don't think this will be big news, but it is something, right? Do I think these are going to be disastrous reports or disastrous numbers? I really don't think so. I think they're going to be decent, and so I think that bodes well for a positive market. Moving forward to Wednesday, we see the consumer price index, core CPI, same thing. This is really just interest rates, right? This is showing how hot the economy is running. I've spoke about this before, and it's still to be seen, right? We know that inflation is happening. You know, all of the stimulus, all the checks that are being sent out to Americans, they are definitely spending that money. How much of it is being saved, I don't know. I'm sure there's some reports out there that's speculating on that. I don't think there's any solid numbers as of yet as to what the savings rate is, but that is something that we'll take a look at. I don't see the consumer price index moving much higher. If it does, that bodes very well for the financials, because when you have higher interest rates, that means banks can charge more for loans. That is their business. So, you know, being that we have a lot of money going out, a lot of liquidity, we can expect consumer price index will tick up, right? So we'll have a bit higher CPI. The federal budget, you know, it's a historical, I'm not going to say historical fact, but it's historical theory, let's say, that Democrats usually inflate the federal budget with lots of stimulus, lots of spending. And as of right now, we have politically the new president, Democratic president, that is looking to push $1 trillion stimulus package. And so we will see increased spending from the federal government, I think, for at least the short term. What that looks like 2 years out, 3 years out, I don't know. But for now, I think we still see that continuing, especially, again, with all the COVID stuff going on. The government has to put money into these government entities to get money out to people. We have the SBA, we have unemployment, we have the stimulus payments, and all those things happening around that. Thursday, jobless claims. Now, this is going to be February jobless claims, and I'll be very honest with you. I'm not sure where this is going. I will think that from my just kind of being in the world, right, like most of you, that the jobless claims are going to continue to fall. Whether or not that happens, I don't know. Will that move the markets? Maybe, maybe not. I think right now the big question and the big drivers are going to be the vaccine, how fast we're going back to normal, how fast the economy is going to recover. And I don't think it's been horrible. I think we're really okay right now. And then Friday, we see the consumer sentiment index. Again, that just talks about, you know, how positive Americans' outlook is on the economy. I can imagine that that's still pretty much in the dumps, but I can see it improving, especially as news from the vaccine and all these things continue to come out. Oh, this is, wait. No. This is last week. Okay, so it's February 12th. Okay, so we don't have anything past February 12th, and that's okay because, again, this is swing trading. So we're only looking to be in this trade a week, 2 weeks, 3 weeks. I think you guys have seen my videos in the past where I think the longest I was in any one trade with these ETFs was a couple months, and that is a long time in a position like this. But sometimes it's necessary, right? The other thing that I was really looking forward to seeing are the U.S. index futures. All right, now these futures don't really start moving until about 3 a.m. Central Standard Time when the European markets open and start going. And as of right now, we see that the futures are up. Whether or not that will continue throughout the morning, I don't know, but I think it's a good indicator of kind of where we are going. And again, remember, this is a swing trade, so if we're up a decent percentage on tomorrow morning, I may just exit my position with profit. So I'm confident that FAS is the way to play this. As of right now, I'm only going to initiate a position using 25% of my total capital, just in case I do need to come in and buy more shares to average down my price. So stay tuned. I'll update you with any new updates, and if I make any further moves or changes, I'll post them here.